Good afternoon. Welcome to the end of day review for today. And today is June 24. It's Tuesday, a second trading day of this week. And we don't have any high impact news today, but tomorrow is going to be huge because tomorrow we have both the CPI data at 8:30, which we're going to get up early and see if we can capture, any, big move right there. And then around 2 p.m., we're going to have the FOMC meeting. Press conference. Basically, they have meeting today and tomorrow. They're gonna come out with a decision whether gonna be leave the interest rate unchanged or they're gonna cut it, or they may increase it. Lots of people speculate that they may raise the interest rate. So early, in the year. Everyone speculate that they're going to cut at least 2-3 times this year, but look like the inflation is still remain very high. If you look at one of the component that the Fed looking is the PCE, which is personal consumption index right here. Expenditure index basically is at the consumer level, like all of us, right? We go out and we pay the mortgage, we pay the rent, we pay for the food, we pay for the energy. They just calculate that and to see the price of goods services that we consume. That price increase or decrease. In this case, you can see that from March to April is remain at 2.7 right there. It not come down. Actually, you jump, right? You see the January and February, actually it's jump. So a little bit tricky for the Fed right now. And we are in week 22. 2 more weeks, we will finish the second quarter of this year. And this week, we don't have any option expiration. But the next 2 weeks going to be huge because we have the standard monthly option expiration and also the one for the quarter, so it's gonna be huge on the Friday, next Friday and the Friday.
The markets are closed.
All right, so that's where we are at, and the CPI we're looking for tomorrow too, at 8:30, like we say. So it's June 12 right there. The next one gonna be July 11, and then the Fed meeting, June 11 and 12, which is today and tomorrow. And then until as we go back to the GDP data at the end of the month, and then the PCE data at the end of the month also. So the GDP data come out Thursday, and then we have a PCE come out on Friday. Yeah, on Friday. Like last time we have right here, we have a GDP come out Thursday, and then the PCE come out on Friday. That's amazing right there. Yeah, May the 31st. That's the previous, the current release. The next week with 28 right there. Yeah, right here. So basically, we're looking for the last week of the month and the first week of the month. And then the midweek of the month is gonna be the CPI data. So basically, a month we have 3 opportunities to trade right there. The first week of the month is gonna be the non-farm payroll, and the midweek of the month you have CPI data, and then the last week of the month we have GDP data and PC data. So that's a huge opportunity. So if we focus, we just do 4 or 3 trade a month right there. So we can take a very selective trade, very high quality setup, so we avoid over trading right there. All right, that is e-commerce calendar right there. So let's look at the chart today, and I think it's today, right? You look at the chart right here, it's just regular trading hour, right? Regular trading hour. We have a gap down, and you see that it feels like it's not filling, but it will filling in the PM. So it got filled in the PM right there, the roller in the PM, and here the star tell us that the market can move. Give it a signal right here. We go into detail later, but when we start trading today, we see the gap down. Let's look at the ICT model. I think he do have a gap down model. So here the ICT model, one trade setup for live right there. So basically, it's gonna continue. Yeah, let's see this setup how it's play out. So it's the Judah swing. At 9:30, which is the down move right here, and it take the sell side liquidity, and then it form a double bottom right here, and it rally and it fill the gap. It probably does not internally in AM due to anticipate the PM section right there. Well, let's take a look to see. Wow, it's quite accurate. You see that? Wow. Man, we make this right here. We didn't make, but we forgot the ICT setup right there, but we didn't miss. We did go long right here. But we should stay in the trade because we're gonna, refill the gap right there. Oh, yeah, you see that? It did, exactly. But today it didn't form the double bottom right here. It's just a rally, and then it's a retracement right here. You see retracement, and then it in the PM section, it break out. It break out at this level, you see right there. Test is below, break it, reverse, and then break it. That's beautiful setup right there. So basically we want to bring to our attention that ICT very accurate in terms of the gap down and continue to rate the low of the previous day. Is that right? Yeah, absolutely. Yes, the low right there. Monday. Wow, very accurate. You see that? Wow. Wow, we forgot to look at the ICT right there, but it's play out perfectly. Wonderful. We're glad that we are review this. Otherwise, we don't know what we are missing. All right, let's see what we have right here. So basically today, that review the trade we take. So we take the trade right before the opening because we saw a very good setup right here. So basically we saw that level right here. Saw that level right there. So it's break it, reverse, break it, reverse. So it's a double break and double reverse right there, and right here is the last upload candle. It's gonna be an order block right there. So we put a sell stop at 53.37 right there, and we got into the trade, and we just aim for 1 hour when we got out. If we stay in trade, we got more than 3R. You see that it's more than 3R. So, but for today, we try to be just at that level. We already have 20 points, which is 4R right there. For today's purpose, we just want to aim for 1R. We want to leave the money on the table. So we try to manage our greedy right there, because we believe that our greedy lead to over trading. We keep one more, and then we take more risk when we don't necessary, and then we take more risk, we give back our gains. That's one of the exercise we try to do today to see how we manage our greed, which is just leave the money on the table. Maybe better later on we manage our greed better, then we can we can let the winner run. But right now we just aim for 1R only, and we're very selective. So that's the first trade we trade right there. Let's take a look at the live recording we have for the trade number 1. Alright, here's the live recording right there. So we put a sell stop at 53.56.75. We put only 1 pip below. The exact had to be 57 level, which is right here. The high of this candle is 57 right there. Or we can aim at the high time frame, but for the entry this morning we use the low time frame right here, which is a 2 pip below the high time frame, and then we put 1 more pip below this high, because we just try to avoid that the situation where it just tap to that price, and then it reverse. It's basically it tap above and then it rise. We try to avoid that, so we put 1 pip below. So that's our strategy for entry strategy right there. Alright, so we get in there, and let's see how we get feel right there. So we put 1 more pip right there for sure, with another pip lower than that. The right exactly entry had to be 53.57, but we put 56.50, so 2 pip below right there. We want to make sure that we get entry when it break the level, not just tap and then reverse. Alright, so we get in the trade, and let's see that, and we aim for 1R, which is 5 point right there, 250 for 1 contract. And we got a little bit impatient right here. So wow, what's going on? So it's just right before the open. You see that? Right before open. And we a little bit we're thinking to ourselves, oh, maybe we're going too early, wait for the 9:30, because the 9:30 may be very volatile, and it may go back and hit our stop loss and whack our trade. But anyway, our worry it not happen. So basically the 9:30 just follow up this downtrend right there. So basically our trade idea is correct, right? It's a fall breakout, not fall breakout. It's a real breakdown at that level, at the level of 53.70, 150 high time frame right there. And let's go here. You see that the level right there. So basically it's a real breakout. It break out the level. You see that? Or this level for that matter. It break out level, break again, and this is just a setup to do a real breakout right there, and a real breakout at the level to make a second leg down. That is a setup that we do for the trade one. Well, let's finish the tap right here with the card, and you can see right there it did hit our target, which is M for 1R. If we let it run, it's gonna be huge run for us, right? Like we say earlier, you see that it's a huge run for it right there. It's about 20 point, which is 4R right there. But anyway, for this trade, which is M for 1R. So basically, hit the trade that yeah, when we took the trade, we take right there. So right there, you see the symbol, which is use the low time frame right there. But if we use the high time frame, it will be similar to that at 57.50, the 2 pip above level. But it still works the same concept right there. You have a real breakdown at that level in order to make a second leg down. So it's double break. I think we did have a right up right here. So yeah, basically right here we do have a right up right there. So it's a real breakdown. We say, yeah. So it's a real breakout, double break and double reverse. Actually, yeah, you say break, reverse, break, reverse, break, reverse. So basically, you have double break right there and double reverse right here, and the last one is just auto block, bearish auto block. For those smart money where they put order in to sell it. So it's a very very good setup for the second leg down right there. Yeah, when we see that, we go in right away and we get our 1R. That's a good start for there right there. Yeah, good start for there right there. See there. And after that, we go in right here. We go long right there. But when we go long, we did not look at the ICT setup. If we look at the ICT setup, we may have stayed longer in the trade. But our simple logic is that it tests from the level where it tests 1, 2, 3. If break it, there's no reason to come back to this level, which is 53, 43, 50 right there. The only come back is to reverse them. So we put a buy stop in there. All right, let's look at the live recording. All right, it's the recording for trade number 2. You see, we put a buy stop right there. So there's no reason for it to come back to the level. But the trick is that we go in after 2 minutes after candle. Let's look at the recording. It worked out perfect for us. If we go in at exactly at 10, we will have a little bit discomfort right there because we look right here. Okay, so right here, you see that as soon as it break, so 3 minutes before 10, let's look. And then exactly at 10, you see that? See right there? So we don't go exactly at 10. You're gonna see that it's rally and then it pull back. So if we go in exactly at before 10, 12, we made down ourselves right there because it go against us. Right, 10:02. Yeah, you see that? That is exactly tell 01 right there. So if we put the order at 10, at 10:02, we get what? We get auto fill, and if we keep our let's see what is our stop loss. We would stop loss is 1/3 of the R. Yeah, so it can be more than our stop loss right there, about 3 point right there. Yeah, we may get stop out if we go we go a little bit early, but we for some reason we try to get in early, but then we couldn't get our auto fill, so we get in at after 10:12, which is working out perfect for us right there. You see, so we go after 12, 10:02 right there, and then it come back. You see that it come back is perfectly. Yes, so as soon as it hit our order, we are in the money the whole time. But if we go in early at 10, we have to sit through about 1 minute out of money, which is, it may go and hit our stop loss. You see our stop loss right there? You see, if we go early, it hit our stop loss right there. Exactly. We got kicked out of the trade right there. So we kind of got lucky right there. So we go about right time, so we don't have to worry about hit our stop loss. We never hit our stop loss. See that? And then the trade is so wonderful. In just 15 minutes, we have the second R right there. So the first R, and then now we have second R 250. So we pocket 2R right away. Let's see, it hit out right there. Boom. We can leave it more, but for today's purpose, we just aim for 1R, which is 5 point or 20 pip right there. That is our second trade. So that is the trade right here. So the trade right here is a typical setup for reverse. You see that? It tests from above 1 to 3 times, break it, and then reverse. Yes, here's our annotation for that setup right there. So it's a 4 breakout, and it equivalent to reversal right there. So you have a retest from above 3 times. You break it, then you reverse. You flip it, break, and then reverse. This is the long setup, and for the short setup, it's going to be the same 3 step, but the first step is also retest, but it's this retest from below. Retest from below, break it, and then reverse. Let's look at some example we have. Yeah, right here. Test from below. You see that? Here, test from above. Test from the short setup. It happened on the non-farm payroll on June 7 right there. So here's the 9:30 when they relieve. 8:30 when they relieve a non-farm payroll data. Mark it down, but it tapped the level, and you see that when it break that level, then you put a sell stop right there. Either that level 72 or 70, it reverse. So you have retest from below, break it, reverse right away. Yep. But if there's gonna be a second leg up, then this gonna be what? This gonna be an auto block and go boom right there. But anyway, this is the typical reverse pattern, we call type 2 right there. We have to to pay, careful attention. If it reverse on the top and bottom, then it work well. But if in the middle right here, we have to pay attention. It may create a second leg up right there. You will see that later right here. Let's look at the second leg up for today. Yeah, today, look at the second leg up happen. It's similar. Be careful right here. You see that it break the level, test from below. You see that? Retest from below, break it, and then reverse. Right? If this happen, maybe around the top here, then it can be a fall breakout. But in this case, it happened in the middle, then it form a second leg up. You see that it's one leg up, retracement, second leg up, second expansion right there. So and then we know that the reverse right here, there will be no follow up, but reverse right here is an order block to go long, not to short from here. I hope that you follow up what we try to say right here. A little bit confusion, but it takes practice. The more we practice, the more we're gonna getting better. At first, it's very confusing. Right here, take a look. Where's the other one? Where are the charts? Wait, is that this one? No, it's not this one. This is the today. Is that this one? Let's close some of this so we will less confusion. It is this one. Not this one. It could be this one. No, not this one. Hold on. We are... Alright, we got to, side by side. So right here you see that it did test from below. You see that? Retest. They both retest. You see that from below? And then it break it. Yes, it break it. And then it reverse. And then the reverse. And then it continue to go down. However, right here, the reverse is the order block to go long, not to short. So that's the thing right there. See that? So it depends on the location. If it's up here, then it gives you an idea that you put a sell stop right here. We can put a sell stop right here on this one, but as soon as we saw that did not follow up, we have to put in a we have to close the trade and go long. So the first three steps is exactly the same. You have a test below a level, you break it, there's no reason to come back here. The only reason to come back is to break that level. And it did break that level, right? In this case, the level 53.60 right there, or the level 57 right there. But let's go with 60 right there. We put 60 right there. So that is the scenario we can see right now. So this is a real breakout at mid level, second leg up. But in this case, fall breakout at mid level. At the 5372 level right there is a fall breakout, reverse right there. But in this case, it's a real breakout, second leg up. So if we can compare side by side, that is how it looked like, and we have to seek the clarity right there. At first, it confused. I mean, we have to go through the long journey. We kind of get a hang of it right now, but it takes time to practice so we can nail down exactly. And so far we nailed them down. You see right there, it's just the first 3 steps is exactly the same. You test from below, you break it. Test from below, you break it. Then we can put a buy stop at the level that it break it. So either it become a reversal right here, then we not miss the trade. As soon as we in the trade, we put break even right there. So in the second scenario, it's gonna create a second leg up. In this case, then we just stop out break even, and then we can re-entry for the trade go to the opposite direction right there. So that is scenario we have to play out in our planning right there. What if right there. But we did got this trade right today. So let's look at the trade number 4. Is that trade number 4? We check trade number 4. Yeah, here's trade number 4 right here. So what we take a screenshot right there. So basically we say that this level, it reverse, right? It break, it reverse. So right here it's gonna be go long, but we didn't go to in at that level because when it happened, we have not figure out yet. Even though we figure out, but we hesitant to take a trade. So we're thinking, okay, well, if it break out at this level, you see that. You see test below right here, 1, 2, 3, 4, 5. So when this guy break the level, it will break the level. That's the reason why we go in, we go long. So we want a little bit confirmation right there. But if we understand the mechanic well enough, we can go in at that level at 50, 60, we analyze right here. Yes, we analyze right here 50. So in reality, today, the trade number 4, we go in at that level. We want confirmation. But in the future, we will go in exactly level it needs to be. It just takes time to practice, right? First, we have to understand first. And then from understanding, we have to transfer that knowledge into an action, into a skills and experience. And it takes time. We know that and we accept that it takes time. But the mechanic is right there. There's no doubt that it's have a mechanic to run the price the way that it leaves the fingerprint right here. You see the fingerprint, very, very clear, the fingerprint that the algo leave right there. So basically, trade number 4, we follow this setup, but we go in a little bit late and we wait for confirmation. Let's see how the live trading. Let's look at the recording. So here the recording, the trade number 4. You see that we put the buy stop right there. No, actually it's a sell. Because we thought that it's gonna be It's gonna be a real breakout at that level, real breakdown. You see that? So we thought it's gonna be breaking down. So we put in a sell stop right there at that level. That can be a short setup right there. Yeah, I think the reason we put a sales order right there is right here. So basically we thinking, well, it can be second leg down right here, all right, or second leg up. So as long as it candle close above here, then there's no reason for it to come back here. That's the reason why I put a sell stop right there. If it come back to the level, then it it will be second leg down, right? That's the reason why we put the sell stop right there. And then when we see how the price react, we know that, oh, now it's the long setup, right? We look at this level, we see it's retest from below 1, 2, 3, 4 times. That's the reason why you see that we're gonna go in. You see that? So we buy at that level and sell that level. So that's our idea right there. So we get in with a long trade right there. So we cancel the short order, and we only aim for that 1 hour, and we move our stop loss to break even. To break even. And let's see if it hit our target right there. But we will let it run. We go in 53.63, right? Yeah, 53. So let's see. Yeah, so we get our target right there. So we go in at this candle. Exactly, it break our level. If we let it run, I mean today we 63, right? We're going about 63. We have a huge profits. Well, we have 4R right there. Basically we have 5R. Actually 4R, 20 point. Basically we left 3R on the table. We only take 1R. But that's okay. That is the practice we're trying to do right now. Leave money in the table so we don't feel greedy, because the opportunities come to us every day, every hour, so we don't have to chase, don't need to feel greedy at all. But I do right there. Basically we put a buy order here because we see that the level right there at 62, but we put 63 just above 1 pip above right there. So here's the level, the range right there. That's our idea. If it break the level, we short them, but if break the level, we go long. And today it play out so beautiful for us. We remember last time we do that, we got hit both because it swing both, and we got lost both trade. But today, the markets give rewards, not give it a loss. So that's trade number 4, and so we have 4R for today. And here's the last trade we take, is trade number 5. Let's take a look at it. Oh, here's trade number 5, the last trade we take. So basically we saw, we put the level at 50.74 right there. Then go into the chart, we see that right here. So basically we sell right here because you see that it break the level 53.64, test above 1, 2. Then when it break the level, it will break the level. It will come down. That's our logic right there. Right, that's where we put in the sell stop right there. And let's see how it play out. Alright, that's candle got flip. You see that? Got flip. Right, it got flip. That's which way it get us into the trade, and we feel so great. We thought that it's gonna come down, it's gonna reverse. But interesting thing happened right there. We said, wow. For some reason, it did not hit our stop loss. Amazing. We put a 60 right there at 53.76.50. But this candle is 70, 53.77. It didn't hit our stop loss. It's kind of scary. If we need to get out of the market, it needs to hit us out, but somehow it did not. And right here, if you feel does not feel right, because when you go in right here, you break the level, it had to flush. It had to, flush. The down move have to be quick, and we don't see that. And when we don't see that, we get out. You see, we're gonna We're thinking about hit break even, but we wait a little bit, couple more, 10 more second, 20 more second. We don't feel right because it's supposed to be flush, right? Because when you break that level, it can flush. But in this case, we don't saw that, so we are close our trade, cover the feed right there, and we get out. And exactly, you see that candle at 15:30, it flipped. If we stay in the trade, we will take a loss right there. We're so glad that we make the right decision right there, and the next candle is really, make the second another leg up right there. So today we have a perfect record. The winning rate is 100%, all 4 trade or 5 trade if that matter, and we execute well. We put all our target got hit. If we stay in the trade longer, we get more profits. But that is not that should not be our concern right now. Our concern right now is that we have a good entry and our target hit. Wanna get out. Let go work for now. All right, so I think before we wrap up here, let's look at the let's look at the 4 hour. So right here, the 4 hour, when it start at 13, right? We see that you just test from below. Either it break the level or it break the level. We just test from above right there. And at 13, you see that the level is 53, 51, and 50, 67, which is right here. Right there, the range is right there on a 50-minute time frame right there. You see that? That's the range. So it break out at that range right there. Second leg up, we saw that setup right. We analyze right there. So test from below, break it, reverse, then we know exactly what to do. We put a buy stop right there. Next time we see that buy stop, put all our money in right there, because it already tests from below, break it, then this is a high quality setup for us, which is auto block right there. We can go in. That's the second leg up scenario. That's it, the 4 hour time frame. Yeah, for our time frame. So we can see that it gives us the idea that if it hit the level, we're gonna do buy stop. Hit level, we can sell them. Buy right here and sell right there. So look at the higher time frame, give us some idea we're heading to. Wow, look at this. All right, here's the one daily right there. You see that level, it tests below 1, 2, 3, and it break it yesterday, and today is, wow, it's set up. It looked like gonna be a huge rally for this week. Look at that. Or maybe whenever it come back to that level, it will break the level. Let's see. So we have a this is a non-farm payroll. So far we see that it take out the buy side liquidity, but it never touched the sell side of this candle non-farm payroll on Friday. Right, so it's Friday non-farm payroll. the beginning of the month, and now we have both of it. It's just within this range on Monday and Tuesday right there. It will be very interesting to see how it break out this range. If break out the outside, then if short them up right here, we can go long. That's the idea right there. All right, I think that's it for today. Thank you for your time and interest. We are always grateful for these opportunities. We do what we love, and success in coming our way. Bye for now and have a great evening. Talk to you later.